What does defensiveness look like in a portfolio for you?
Yeah, that's a very good question. So our definition of defensiveness is that either you can have companies which have strong balance sheets, so companies holding a lot of cash. Ideally, some of these companies are also paying you dividends. Maybe some of these companies are also embarking on buybacks to support their stock prices. So that's one area of defensiveness. I think the other area of defensiveness for Asia is we focus on some of these idiosyncratic themes in Asia. So, for example, in my view, China reopening recovery is still a very idiosyncratic theme. So, in other words, irrespective of whatever happens in the US in terms of banking sector issues or slowdown, recession, or Europe, I think this theme can continue for a while, for the next 3 to 6 months at least. Similarly, you can have Thai reopening, recovery plays, consumer plays. I think that's also, another idiosyncratic theme. And a third theme I would say is, we can be hiding in some certain styles in the market. So, for example, some of the work we've done shows that dividends as a theme tends to be a defensive theme and tends to outperform, when you have an environment where growth is slowing down and there is kind of stress in economies. So that's what happened during or into 2008, 2009 down cycle.
You mentioned the banking turmoil. Can we look past that? We saw some strength already in the past few months on Asian financials before all of this happened.
Yeah, I think it looks like the worst of the banking sector issues are possibly behind us. That's obviously, I would say a less conviction call here. But for Asia, I would say things are a bit different. We've not had similar sort of issues. And part of the reason is that most Asian central banks did not hike interest rates quite aggressively, as was the case in the US. Maybe Philippines was a bit of an exception, maybe to a certain extent Korea was an exception, but largely inflation was not such a big problem here. So we did not have such sort of issues for banks here. But having said that, I think it does make sense to be a bit selective on banks here. And our view is that there are banks in Asia, predominantly from countries which tend to be very levered to the bond yields in the US, i.e. Singapore, Korea, Taiwan. They might actually struggle if you assume we are going in a period where bond yields will start declining. But on the other side, I think banks in Southeast Asia, specifically ASEAN 4, India, even for that matter, Hong Kong, China might be okay because some of the local factors possibly will continue to support these banks. It's a bit nuanced view there.
Chetan, are you nuanced when it comes to the broader lift for both Asia tech, China tech, and also more broadly emerging market equities, given the initial exuberance in reaction to the Alibaba restructuring?
Well, there could be some bit of overreaction, but I personally think that I think what we've seen over the last 2-3 days on these restructuring news is a very good positive outcome for overall China equity space. The way I'm thinking about is beyond the stuff which the stock analysts will tell you. This is something we would not have expected, call it 6 months ago, because the sentiment in the sector was pretty cautious. But the fact these companies are embarking on value unlocking, you would speculate that maybe, these companies have the support of Beijing. I think this is a very good signal that the policymakers or Beijing is now actually supporting the private sector. This was not the case 6 months ago. So I would say very good for China equities.